What's up, guys? Welcome back to the Olympus Academy. Okay, it is Chen over here, and today I'll be talking to you guys about the content for today's video. Is going to be about where will be the USD headed to. So I'll just like to analyze some of the FOMC meeting minutes because I think that's very important in understanding and finding out what are the clues and hints that the Federal Reserve Committee actually left us with. So just do stay tuned for us for it, guys. Okay, so without further ado, let me just delve right into the content for today. As usual, as you can see on the screen, I have my chart side by side with the FOMC meeting minutes, and the chart that I have currently is the DXY chart, which measures the strength of the USD based on a basket of currencies such as Euro USD and USD JPY. So if you look at the meeting minutes, guys, okay, let me just highlight some of the key important points, okay, shall I? So, okay, 75 bips points increase in the target range. Okay, they say that most respondents to the open market desk surveys viewed a 50 basis point increase in the target range for the federal funds rate. So that is signifying that actually, wait, hang on, just let me mark that out for you guys, that they are actually very, they are starting to become dovish in the market. And that's especially important, and it's a very big clue for us because when the committee is especially dovish, it would mean that the markets can potentially start to take on more risk. And if that happens, the FOMC would then start to, not FOMC, like the market will then start to price in more risk-on sentiments in the market, which is very important which has actually led to much rallies in the market currently and across different markets. Yeah, so that's one of the important points that we would have to take note. And so the entire gist of the meeting minutes that the Fed's actually published, right, on yesterday, actually it has just kind of mentioned the dovish stance that the market is currently taking, and that is the reason why we can see that the USD actually have been dipping, as you can see on the chart over the past week. So you just look solely on the month of November, it's actually been bearish, guys. So that just shows that the market has been pricing in the risk-on sentiments, okay, and the USD has been depreciating against other assets and currencies such as Euro USD. So if you go to look at the staff review of the economic situation, guys, okay, so they say that total non-farm payrolls employment posted a solid gain that was somewhat lower than the pace seen in recent months. And that is also a clue, guys. Okay, remember, employment is a very big indication of where the market is, or how the market is doing in an economic growth standpoint. Whether is it about to hit in a recession, or is it continue to go and grow, right? So they literally say here that in September, the total non-farm payroll employment posted a solid gain that was somewhat lower than the pace seen in recent months. So that actually tells us, right, that actually shows to us that the market is still resilient and it can potentially continue being resilient. However, of course, the market is, with all the very aggressive rate hikes that have already taken place, the market will surely be waiting for the non-farm payrolls to come out not worse off than expected, or the unemployment rate to actually increase. So if you can see, they also mentioned that the consumer price inflation actually remains elevated, okay, which is very, very apparent and is still very high. However, the recent CPI, CPI data that actually came out actually showed a decline, not a decline, but a slowdown in the growth. And the market actually took that as a very positive news, okay? And that actually really led to an increase in risk-on sentiments in the market. And that's the reason why the markets, as I've mentioned just now, have been rallying. Even the stock markets have been rallying. Even currencies against the USD have also been rallying, guys. Right, so let's see other things, other clues that can possibly affect inflation. Sorry, not inflation, the USD. So yeah, so this is all talking about credit, talking about the bonds, right? The credit quality, and how the credit market has been doing, how the credit quality of most households appearing to be solid. Talking about a residential mortgage, and the next one is also going to be very important because it is the staff economic outlook. So the projection for the U.S. economic outlook prepared by the staff for the November FOMC meeting was actually weaker than forecast, right? And that actually, it shows that the market has been pricing in the factors that they expect the Feds to be more restrictive. However, that was actually not the case, and we actually decreased, or not decreased, but because of the Fed actually signaled that there might be a potential slowdown in rates over the next course of the future FOMC meeting. So I actually believe that for the December FOMC meeting, the market will be pricing in a 50 bips instead of 75 bips, and it will actually start to slow down their rate hikes, as there have been signs that inflation can continue to be, I'm sorry, not can actually start to slow down. So of course, currently there is no strong confirmation and no strong evidence that is actually slowing down, because we would need to see a trend for that. However, I do believe that the upcoming inflation reading on the 13th of December would actually come out to be slower and better than forecast. And what I mean by that is that I will actually see a trend in which inflation is slowing down, and that is when the market or the USD can actually start to actually properly slow down their rate hikes, and that's when there will be more risk on sentiments in the market. So remember that the market currently has, although been pricing in the risk on have been showcasing the risk on sentiments in the market, and it has been pricing in a potential slowdown in inflation. However, if a news come out that the FOMC decides to slow down their rate hikes as well, and be less aggressive, potentially more dovish stance to 50 basis points, that could potentially lead to another market rally, guys, okay, across stocks or across currencies that are against the USD, or even gold, guys. So yeah, so that is definitely something that we'll be looking out for. So however, I do believe that eventually in due time, the market would definitely have to start to price in the economic outlook of USD, because that is also something that is crucial. The market have always been pricing in inflation and have been factoring in about inflation and the Fed's stance, but it's about time they start to factor in the potential recession that the US can actually hit into, which can severely affect their economic outlook. So if you just look at the chart on the DXY, guys, okay, so we can see that on the monthly time frame, actually price reacted of this specific zone here very well. This entire high, you can say it have actually reacted off this entire high, and it is actually having very strong bearish momentum. So yeah, so as mentioned just now, this bearish momentum was actually the result of the market, starting to have more and more risk on sentiments. Okay, and if we go down to the weekly time frame, guys, so we go down to the weekly time frame, we can see that the market, actually have not broken bullish market structure, but we can consider this area here to be an area of very important structure. So that would be the swing low, and if price were to actually break below this swing low, we can actually see some form of retracement before starting to head back down. So this is the outlook that I have for the USD, and actually I believe that there can be more risk on sentiments in the market. However, I believe that as when the next year comes by and the market starts to price in the economic outlooks, and possible recession taking place, that is when the USD will actually start to take a bigger hit. Okay, So however, for now, I believe there can be more risk on sentiments in the market, and the US dollar can potentially drop further. And I think that, it can, the moment it breaks structure here, we can see a nice retracement and start to hit down further. So that would be my outlook on the USD as mentioned. So some very important news to take note of is that on the 14th of December, that would be the next FOMC meeting where the Feds will be issuing their interest rate hikes, and also the NFP for the month of November will be published in the first week of December on the Friday, as usual. So there are two very important news indicators that we would have to take note, and also CPI that's publishing on the 13th of December, because that is also a very key indicator of how the effects of the interest rates has been in the market, in the US market, in the economy. So that will be it for me, guys. So I really believe that USD can potentially drop further, and that will be my outlook. However, of course, if you guys are into any trades on the US dollar, make sure to understand that, or make sure to manage your risk properly. And if you're taking any positions right now at this timing on a Friday night, I think you should just call it a day, enjoy your weekend. On a Monday, come back stronger, come back more refreshed with a clearer mind, and that is how you guys should do it. So trade safe, guys, and I'll see you guys on Monday again. So as I want to reiterate my stance on the USD, that I believe the USD can actually have potential to continue heading down, okay? And to where, who knows, maybe this potential demand zone could be a certain specific area, but I believe that there is more room for risk on sentiments in the market, which could possibly see the US dollar start to drop further. So that'll be it for me, guys. Signing off. Shani signing off, and do follow our social media links and drop a comment down the comment section below when this video is published. Make sure to subscribe to us, our YouTube channel, and there's a lot more content that will be being published. And make sure to follow our social media links. Okay, so this is just some of the trade ideas that I would publish. Okay, so this is my TradingView handle. Make sure to give it a follow, guys. It will really mean the world to me. And also to give my partner Yongqing a follow as well. Okay, so let me try to find his just 1 second. Let me just try to find his charts. Okay, yeah, so this is his profile. So make sure to give him a follow, guys. Okay, so he published a lot on Euro USD or gold, stuff that will really help us a lot as well. So that'll be it for me. So I really hope that you could gain some value of today's video, and I will see you guys again next week, next Monday. Trade safe, guys, and enjoy your weekends. See ya.